Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts. Welcome to Market Insights, our weekly commentary on financial markets. Let's get started. Well, the obvious topic for this week's Market Insights has to be what I think is on the minds of most investors. Why does the market keep going down, and what's going to make it stop? And for once, I think there are some pretty clear and compelling reasons for both why the market is going down and pretty clear insights as to what's going to make it stop. So, why has the market been going down? Well, why did the market go up in the first place? And in our opinion, the most important reason the market went up is the Federal Reserve. The Federal Reserve for the past year has been helping the US government fund its deficits by printing money and injecting it into financial markets. That's been a powerful tailwind for the equity markets for the last year when they were printing $100 billion in September, October, November of 2019. And it really went into hyperdrive in March, April, and May when the Fed started printing over $1 trillion. But that was then, and this is now. Right now, the Federal Reserve for the past several months has been on idle. It's hit the pause button on its money printing machine. And without new money pumping into financial markets, that allows other issues to start rising to the fore and start becoming the more important things that investors are thinking about. So, why is the market sold off? Number one, the Fed. But the Fed alone wouldn't be enough for this sell-off. There are two other things that are happening: the economy and the election. So the economy and the Fed are pretty tightly tied together, because the reason why the Fed started printing $100 billion a year ago, finance a deficit of about $1 trillion. Why did they accelerate money printing to $1 trillion a month back in March and April? Because the deficit went to $2 or $3 trillion and it needed to be financed. So there was a connection between the deficit and how much money the Federal Reserve was printing. And a lot of market observers, ourselves included, expected that there would be another COVID-19 stimulus package before the election in November. That would be bigger deficits and the Federal Reserve needing to print more money to fund those deficits. Well, that hasn't happened. Congress and the President have not been able to agree on a new package of COVID-19 stimulus measures. That has really significant implications for the economy. Because if we were to go back to March, when the first COVID-19 package was put together, it was this rare moment of Congress, the Republicans, Democrats, they working together, doing some powerful stuff for the economy. $1,200 for most American families, $600 unemployment benefits every week, forgivable loans for businesses to keep them afloat. All these things were powerful economic support systems as we were going through the maximum pain of COVID-19. But most of that money's already been spent. Most of it's gone. And by the end of September, the last of the $300 unemployment benefits checks will run out of funding. And in October, there's not going to be any enhanced unemployment benefits for most Americans. No more forgivable loans for businesses, no household checks. All of that stimulus is in the rearview mirror. And in October, November, the economy's going to have to live without it. And that's bad news, because as we've seen that money roll out of the economy, as the stimulus checks, the unemployment checks went from 600 to 300, we've already seen the economy really take a shift down in growth, and the recovery has lost a lot of its momentum. One of the most important indicators of nearby economic health is the weekly jobless claims numbers. It's been stuck at about 850,000 to 900,000 for the last 2 months. To put that number in perspective, before COVID-19, the highest that number had ever been, the worst it had ever been, was about 690,000, and that was 1 month back in 1982. So to have 2 months at 850 to 900,000 in the middle of what's supposed to be a recovery, you can see that the economy still has a lot of suffering going on, and now that suffering is going to intensify. Financial markets aren't liking that. And then that brings in the third element, which is the election. There's a huge amount of uncertainty over this election, not least of which because we've lost a lot of faith in polling back because of the 2016 election, and also because if all this economic pain is going to hit in October, who's going to take the blame? How's it going to impact the election? And no matter how the election turns out, will there be a clearly declared winner on Tuesday evening in November? The president has made a lot of noise about he's not just going to concede. And of course, Joe Biden can't just concede if it's a close election because so many Democrats are planning on mailing in their ballots, and it could take a couple of weeks to count those. So we could go from a period of economic pain to a period of political uncertainty. And financial markets don't like that. And they have reacted to that by selling off, and they may continue to until this uncertainty is relieved. So, how does this all get resolved, and when do we get back to better financial market conditions? Well, in our opinion, it is a matter of when, not if, there will be another COVID-19 stimulus package. Once we get through the election, once we have a new president, and we do believe no matter what the Sturm und Drang going on right now, there will be a peaceful transition of power. Once that has occurred, the first item on the agenda for the new administration, if it's a new administration, or for the second term of the Trump administration, the very first item on the agenda will be another COVID-19 stimulus package. And it will mean that there will be another round of Fed money printing to fund that COVID-19 stimulus package. So all the things that made the late spring and summer months so much fun for equity investors are likely to be repeated early in January, February of 2021. So what should investors do? Well, to quote the great Betty Davis,
fasten your seatbelts. It's going to be a bumpy night.
It's going to take time to get through all of this uncertainty, and financial markets could continue trading down until that uncertainty is settled. If you had asked me before Justice Ginsburg died, I would have given very good odds that we would have another COVID-19 stimulus package before the election. It's just too much political pain for politicians to take right before they have to stand before the voters. But with Justice Ginsburg passing, it's hard for me to believe that senators are going to spend the morning screaming at each other about the Supreme Court nominee and then spend the afternoon collaboratively working on a stimulus bill. It just doesn't seem likely. So we're going to have to wait longer to get that economic relief. And that's going to wind the spring, and it's going to make more downward pressure possible for financial markets. So you need to be ready for that. And if you are not emotionally or financially able to take more downside in equity markets, you might need to take some action in your portfolios. For everyone else, everyone who's been saying, I'd really like to buy some more, but gosh, the market keeps running higher and higher. Well, this, I believe, is going to be a really good buying opportunity. Ultimately, as I said, this gets the political conversation gets resolved peacefully. Once that happens, the economic question is resolved with another COVID-19 stimulus package, which brings the Fed back into play. And so I would be preparing yourself. I'd be asking, what are the things how much am I going to buy, and where am I going to buy in equity markets. And in future Market Insights, we will continue to give you our opinion about where that additional money could best be invested and where some probable good places in your portfolio right now that you might want to think about raising cash to fund those investments in anticipation of what could be an exciting 2021. Thank you for tuning in to Market Insights. We hope you found it informative. If you'd like to see more of our research, you can look on our website at caravelconcepts.com, or you can subscribe at the link below. Thanks.